Suzanne Voter of Delta Home Loans. I am a mortgage broker. I hold a California real estate broker's license, and I'm a certified mortgage planning specialist. We've been lending in Nevada County for the past 20 years. One of the programs I'd like to highlight is the 203K home improvement loan. We're seeing an awful lot of foreclosed properties. We're seeing an awful lot of properties in distress for one reason or another. This program allows people to come along, purchase these homes, and fix them up within the home purchase loan that they can take out and get these fantastic, amazing prices that are out there right now. This loan can be used for something as little as new appliances, a new roof, new windows. It could be used for as much as adding a second story, new garage, bedroom, bathroom. It goes up to $150,000 in home improvement for this home loan. It also benefits current homeowners. Homeowners that maybe don't have a lot of equity in their home to be able to go in and get a traditional equity loan and take out the money that they need to improve their home to possibly make it sellable in the future. So I think it's a fantastic loan. This takes the place of a traditional construction loan. It doesn't have the time or the expense of a traditional construction loan. It provides affordable financing. It provides low down payment with as little as 3.5% down payment. Low interest rates of today, you can get them under 5%. And finance, again, all of the amount of money to do the improvements. The loan maximum in our county is $562,500. That buys quite a house, don't you think? For some of the homes that are selling, that had sold in the past for, what, $700,000, $800,000, that may be able to get something a little bit in this neighborhood, I think it's a heck of a deal, and it's a great way to buy a house that maybe you want to make your own, put your own touches in. And frankly, we've seen homes lately that don't have kitchens anymore, missing bathrooms, missing walls, decking, and so on. So this is really helping a lot of borrowers do that. The type of homes that are available are 1 to 4 family unit properties. You have to own or occupy the property. We don't have a loan yet for investment properties. I understand there's something in the works, but not yet. Of course, you have to be a U.S. citizen. It is a full documentation loan. All those wonderful stated income loans kind of gone away for now. They may be back someday, but this particular loan does have good credit criteria. It allows you to borrow more possibly than you think you can borrow under the low payment programs. They allow you to do all kinds of things. Additions to the structure, additions to the unit, complete renovations, kitchens, finished basement or attic. That's always fun. Do you watch home improvement shows like I do? Want to finish out a room that looks horrible right now? You can do that. Roofing, decking. We're seeing a lot of problems with decking and termite work when someone's trying to purchase a home and they, frankly, the seller doesn't have the funds to fix that deck and the buyer doesn't have the funds. Well, this loan will help pay for that deck. It'll do patios, terraces, all termite type improvements. The things that are not eligible for this loan are considered luxury items. You can't put in a swimming pool. Can't put in a tennis court. Gazebos, barbecues, fun stuff like that. They're not allowing us to do that with the home loan at this time. The loan has 3 different criteria, and it's in your workbook as well. There's 3 different phases. Up to $15,000 in home improvement, the borrower does not need to use a contractor. If the loan amount is between $15,000 and $30,000 used to fix up the home, they do need a licensed and insured contractor to oversee the work. If the loan amount to improve the home is over $35,000 up to $150,000, not only do they need a licensed contractor, but there's also a facilitator determined by HUD to help make sure everything goes as planned and they're not paying too much. So that's a little bit more costly, but again, it is a much less expensive loan than a construction loan, and it takes a heck of a lot less time. I want to talk about another program as well, a Fannie Mae Home Affordable Refinance Program. This is a program that you've probably heard all over the news. It's changed probably 3 times since it came out 15 days ago, but it's a terrific program for people whose home loans are currently held by Fannie Mae or Freddie Mac. And you can easily verify that yourself by going on their websites, Fannie Mae and Freddie Mac's websites. Put in your home address, and it'll tell you whether or not your home is held by Fannie Mae or Freddie Mac. These programs are allowing refinancing up to, well, it was 95%, 105%, then it went down to 95%. May 1st, it'll be 110% of the appraised value in the home. So if your home is decreased in value, with a new appraisal, they'll allow you to refinance your existing home loan, first deed of trust, up to 110% of the appraised value. Interest rates are up fantastic. We're getting interest rates, again, well under 5%. 30-year fixed, 40-year fixed. We can even do short-term loans with lower interest rates than that as well. See, the 95%, that did change. It's now 110, so that's pretty cool. Some of these are allowing stated income, believe it or not. If there's enough equity, if you've been in your home long enough, if your credit's sufficient, they may ask for or nothing. Just give you a lower rate. Here you go. You made your payment on time all the time. Let's give you a lower rate. They're offering also property inspection waivers. That means no appraisal. It all is determined by your credit, your income, your job stability, and it's run through Fannie Mae's website directly. That's what we do, Fannie Mae or Freddie Mac. So it's almost like throwing it against the wall, see what happens, see what we come back with, and then we give you your loan approval. But for many, it's so valuable to get from a 6 5/8 interest rate to a 4 3/4 interest rate and saving $300 or more a month. That's huge right now. I don't know about you, but it is definitely for me. There's no mortgage insurance required for this loan, so that's a good thing. It's not an FHA type of a loan. I want to tell you about one more. We don't have a lot of time. I'm kind of going over these quickly. You can always give us a call at the office, and we'll go over your personal and particular situation. But another one I want to talk to you about is the Fannie Mae Home Path Purchase Program. I don't know if you've heard much about it. I haven't heard a lot about it in the media. But again, if you're purchasing a home that is currently held by Fannie Mae, and it does not have to be a foreclosure. It doesn't have to be an REO property. It can be anybody's home whose home loan is held by Fannie Mae. They're allowing a program with as little as 3% down, no mortgage insurance. We're helping a lot of first-time home buyers get into their homes this way and be able to afford nice homes with very little down. Mom and dad can help with that down payment. The credit scores, they're allowing low credit scores. They're probably going to change that. They're probably going to go up to about 620. They want to see that you have decent credit and at least 3 forms of credit in order to take out this particular type of a loan. The last loan I want to talk to you about is a reverse mortgage. We're seeing an awful lot of those nowadays with many people's portfolios diminishing, balances going way down, and income has obviously gone way down on these portfolios as well. If you and your spouse are over 62 years of age, you would qualify for a reverse mortgage. They're not like they were 10 years ago. The bank cannot go in and take your home. As a matter of fact, if you were to sell your home and there is equity remaining in your home, that equity is yours. All you pay off is what is owed on the loan. So reverse mortgages seem to be helping a lot of people get out of house payments, no more house payments, or take a monthly draw or a large portion out to go invest in something else as well. We're doing a number of those, and again, if you have questions about them, I hope you give me a call. I'm sorry we don't have a lot of time to go over so many more things, because there are a lot of things out there, a lot of more things coming out there, but I hope you give us a call and let us know what we can do for you. Suzanne Voter, Delta Home Loans, and Delta delivers.